Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Once again, happy Friday. Hope you guys are doing fantastic. Well, all the craziness continues. Now, last week I told you interest rates got a lot better based upon the stock market really taking it on the chin. This week, rates finished about the same as they ended last week. We didn't see a major improvement or worsening to interest rates. The stock market has, while losing still a little bit more ground, has somewhat stabilized. There's been some days where it's hoping to mount a rally, but that's not really happened. So, again, just right now, a whole lot of volatility, and everybody's kind of waiting to see what happens with stocks, and interest rates are really focused on that. Now, in terms of economic data, we did see, again, quite a bit of economic data this week. First of all, we saw building permits and housing starts both come in about in line with expectations. Building permits was definitely in line. Housing starts was slightly worse than expected. Today, we did see a big kind of a shock. We did see existing home sales come in over 15%. That's actually the largest month-over-month increase ever. So on the surface, that looks like, oh my gosh, housing is just, on fire. Well, when we look at what happened last month, we did see November show one of the largest declines in about 5 years. And this is all due to TRID. So, we know TRID went into effect in October. That started with closings happening in November. And it looks like a lot of closings that were supposed to happen in November got pushed out really to December, making November a lot worse than what typically would have been, in December a lot better. So that's why it's always important to look at these numbers in the big picture. Next week, we're going to see the Federal Reserve January meeting, and that's what the market's really going to be looking for. Remember last Federal Reserve meeting, they did increase credit 0.25%. And also, the Federal Reserve telegraphed that, well, maybe in 2016, and they do this by, they don't come out and say it, but there's this plot charting and stuff that they do. But it looked like that in 2016, most Federal Reserve members believe that there might be as many as 4 increases to short-term credit. And that's one of the reasons why the stock market just got hammered this previous week. So I don't expect there to be any, it'll be a big week. The market will be waiting with bated breath to find out what the Federal Reserve does on the meeting on January 27th. But I'm not expecting that, and the market really probably doesn't believe that there's going to be much change, just with all this volatility in the stock market and with the fact that we're not seeing a whole lot of inflation. In fact, the core CPI came in showing a 0.1% increase, which is very slight, and the headline number only showed, actually showed a 0.1% decrease. So there's no inflation, and the economy isn't, doing fantastic. And we've seen a lot of volatility in the stock market, so the Federal Reserve isn't going to really want to upset the apple cart and see what happens here. So we'll keep you informed, though, and let you know what's going on. Thanks for joining me with Java with Jared. Happy weekend. If you have any questions, give us a call, and we'll talk to you soon. Bye-bye.